What's up everyone, my name is Anthony and in this video I'm going to be doing a quick update on the broader markets as well as some specific stock picks and discussions that we had in the past video and just kind of giving an update of them and how they performed today in the market. So my main topics of this video will be on AMC and GME, the main meme stocks. And before we get started, if you feel that this video is helpful in any way, feel free to leave a like and subscribe to the channel. And also be sure to join the Discord if you haven't done so already. The link to join is down in the description below. So let's first talk about AMC. In the past video, I explained how the 1.414 extension level and the 1.618 extension level, so 31 to 35, will be a very high probability level of this stock reversing to the downside. And in this trading session today, we got exactly that. So we did have a very nice gap up pre-market, and we did open up right around the levels here, so around 30-ish, and the stock was up massively. And then when we got into this level of danger zone that I mentioned, I did signal this to my Discord immediately, and we actually did enter puts at this time. So somewhere in this white box, we got some fills on puts, and that was some really good gains to be made because if you got anywhere here, that's like 20%. If you got like a decent fill, 20% gain just from like the stock moving down. So I think some people in the Discord are making like 300% off puts, which is insane. So congrats to everyone in Discord who joined me on the puts. And some people were also in AMC long, and because of this analysis and knowing that the 1.414 levels and the 1.618 levels were very high chance of reversing, they were able to safely exit their position before getting caught in this downwards move. So if I zoom into the 5-minute chart and just kind of looking at some of the price action on this time frame, we see we tried many times. We pushed above it. We opened right around, actually right exactly at the level of the bottom rectangle. And then we pushed through it, and then we had a bunch of bearish candlestick wicks, so we failed to push, and we started seeing a bunch of these candlestick wicks forming, which indicates that we are getting ready to reverse to the downside. And if we zoom in on this price action, we can kind of see an impulsive structure forming a bearish one, so a 1, 2, 3, 4, 5. Just essentially doesn't really mean too much, just like you can see that there's an impulsive break to the downside, and overall we can kind of see maybe an ABC forming right here, and then we can expect maybe another impulsive move to the downside in the future. But for now, I'm not in any puts anymore. I exited my position, and we're pretty good profits. So if we have this structure, we can form an ABC correction to the downside, which would potentially form, so if I zoom out here, if we do have this kind of structure I described, this would form the wave 4, and then we could potentially push up for a wave 5 if there's enough bullish momentum left in the stock. But overall, yeah, that's what I was seeing in terms of the stock, and really good profits to be made from the puts. And yeah, so we got in on the top right here pretty much, and just like in the past video, I said that we would be reversing at these levels, and we got exactly that in today's trading session. And also I mentioned in the past video how the EMAs would act as a level of support, essentially like where the stock would go down to, and we get exactly that once again. So if I zoom in here to the 12 EMA right here, the stock, when it fell down, it's hovered right around the 12 EMA. So that was essentially like a good area to take profits on. And yeah, so just once again, to reemphasize, when a stock moves up like this parabolically, you can guarantee that it will return to some of the EMAs very soon. And we got exactly that. So first we're taking the 12 EMA, we're stopping right here. And I anticipate in the next few trading sessions or so, we're going to probably come back down to this EMA over here. And that would form your typical A, B, C correction, which looks perfect. Everything looks really good so far. So exactly as expected for AMC. And this is a very volatile stock, so it can be pretty hard to know exactly what's going to do. But when you can break it down in terms of wave theory and EMAs, you can find some pretty predictable levels that it will have a reversal at. And so yeah, really good profits to be made from the puts today. So once again, if you haven't joined the Discord already, be sure to join it. I post all my trades and all my analysis on there. And so yeah, just check it out. Link to join is in the description below. So next, I'm going to move on to GME. So we got the exact same thing as AMC. We got a huge reversal. So we lost 12.64% in the stock today. And we actually reversed right at the 0.5 level. So in my past video, I explained how these levels, so the 0.618, the 0.382, and the 0.5, would be levels of possible reversals. And for GME, we actually did, I think, gap up slightly. So right here, we gapped up a little bit. And then we kind of hovered around actually, sorry, this was not from the current trading session, but for GME, I think we were up a little bit pre-market, and then we came up to touch this level right here, so the 0.5, and then we failed and then reversed. So essentially what we're seeing right now is just this reversal from that level. So if I go into like a smaller time frame, we can see that I think towards the end of the trading day, we really started to get that sell-off because we were failing to break through some of these levels right here. And in terms of GME, I did not make any trades on this because this is obviously very risky. I feel like AMC was a little bit more high probability of working out. But in terms of the stock, it's hard to tell exactly what it's going to do now. We could see a reaction against some of these levels, maybe a quick bounce and then a failure. But honestly, there's no way to really tell what it's going to do at this point. The reason why I was taking the AMC trade, because this is just a very high chance of working out. And these levels are very commonly used for areas of stopping in a third wave. So if we break it down, like I did in the past video, we have a 1, 2, 3, and then we have some kind of 4, 5 forming right here, something like this. The third waves usually stop 1.414 and 1.618 if they go past the 1-to-1 extension of this first wave increase. So just to summarize, AMC and GME did exactly as expected, and over the next week or so, we'll watch to see how the price moves. And it's pretty interesting to watch because these are very volatile stocks. So now I'm going to be doing my usual market analysis. So over here, we're going to be looking at the S&P 500, which is reflected by SPY. And just to give a brief overview of what we're seeing in the past month or so, we have a very clear impulsive formation forming right here. So we have a wave 1 up, wave 2 down, and then we have a wave 3 up over here, and then this choppy wave 4, and then we have a wave 5. We're working on a wave 5 to the upside. So if I show you the technical analysis and the wave counts right here, we can see that we can clearly subdivide each structure by its counterparts. And now we're working on, it looks like we finished this wave 4 and are working on this impulsive wave upwards for the wave 5 right here. And then right around July-ish area, so maybe early July, I got a lot of questions asking the exact dates of when this is going to occur. As of right now, I think it's very hard to predict a market top, obviously. We're basically trying to predict this huge bull market top and then a possible bear market that's occurring over the next few months or so. But it should happen somewhere around July. Early July sounds reasonable to me, but what tends to happen around these tops is that you do get some sideways action. You don't get a direct failure and then a huge drop. It's not gonna happen. We're gonna have like some kind of stalling at this level. And then when prices realize that they cannot break through some of these key levels up here, they're just going to start slowly grinding downwards. So that's what you expect to see in a bear market when the bear market starts hitting. And overall, the general wave count that we would be seeing, so if I zoom out all the way over here back to the COVID area, we would see some kind of wave 1 up here, and then a wave 2 down here, and then a possible 3, 4, 5 in the upside. So this bear market over here would be the wave 2 of this upside. And obviously, we should be using like some kind of broader wave count. But yeah, that's what it looks like so far, the price trajectory. And I'll definitely be targeting this wave 2 downside for puts, and I'll be posting those in the Discord when we get to that time frame in the markets. So now just to go revisit the market count. So let me go back to the 15-minute chart. So I want to kind of break down what we're seeing more recently. So over here, this wave 4 is very choppy, extremely hard to trade, and you just don't want to deal with this. It's just a WXYXZ essentially, or you could form a just general complex correction, so overlapping complex corrections, which is arguably the worst thing you ever want to have in a market, because these make everyone lose money. So you have like up, down, up, down, up, down, up, down, and whenever you see that, that's just a complex correction. And we can clearly see an impulsive breakout from this pattern. So a 1, 2, 3, 4, 5. So the way you label this overall, you want to put the wave 1 either here or here. It doesn't really matter because you can clearly see some impulsive structure forming. You can see a 1, 2, 3, 4, 5. You can see a 1, 2, 3, 4, 5. There's a bunch of impulsive 5 move structures. So this indicates that we've exited this correction in the wave 4. So I'm definitely still looking to target calls on the market, but I want to throw out just a little bit of a warning, but because over here, if we do have a 1 up here and then a wave 2 forming, we could possibly see some kind of A, B, C formation. The reason why I haven't entered or doubled down on any positions yet, and I actually did take some profits around these levels up here, around the high 420s. The reason why I took profits because technically we haven't had that impulsive breakout for the wave 3 yet, and so I was looking for some kind of breakout above these levels of resistance, so right here. So I was waiting for price to gap up, so we would have some kind of gap up and then a continuation past these resistances. That would be a very bullish indicator that we've entered that wave 3, but so far we haven't gotten that. And this could be due to the fact that because of the recent hype in AMC and GME and all these meme stocks, that kind of has soaked all the buying pressure away from actual market, like things that relate to the market. So overall, we've had a pretty like low volume week, extremely low volume in general. So just look out, just a warning, like we could possibly see a wave C to the downside. It wouldn't be a very large move to the downside, but you don't want to really buy at these levels when you're not really sure what's going on. So once we do get that bullish confirmation of the wave 3, I will be tripling down, quadrupling down on any SPY calls because this wave 3 will be looking like a lot of upside and a lot of profits to be made. So definitely going to be keeping those updated in Discord. So that's just a quick update on SPY. Overall, still bullish, but I have not entered any very leveraged calls yet. I'm still waiting for that confirmation of a bullish upside. So now we'll move on to the tech sector or the triple Qs. So overall, we see an impulsive structure forming in the broader long term. So 1, 2, 3, 4. This whole thing is a 5, and I've subdivided this wave 5 into its individual counterparts. So a 1, 2, 3, and this whole thing will be a wave 4. So right here, this chop up and down will be a wave 4. And now we're working on that wave 5 potentially. Or we could be working, as I talked about in a previous video, we could be working on the second leg of a complex correction. So the WXY and then an XZ. Either way, there should be some upside left to the tech sector, which would make sense along with the S&P 500. But generally, triple Qs looks less bullish to me than the S&P 500. So the reason why is also because this wave 4 formed a complex correction, and we had a failed impulsive wave structure here. So you can clearly see a W, then an X, and then a Y, and then we could see that same thing again, so an X over here, as I said previously. That would just indicate that we don't have enough buying pressure to push upwards for an impulsive wave 5. And the only difference I would make is that the targets for another X wave would be a little bit lower, so around maybe 350 or 345, whereas an impulsive break to the upside would have targets around 353 to maybe 370 even. So that's just a quick update on the tech sector. This is another reason why in my Discord I'm signaling calls on SPY and not the triple Qs. But yeah, so far all the calls have been working out. There's been successful gap ups in the market, and we've taken profit around those areas when it gapped up. And we're not too heavily leveraged in any calls at this point anymore. But definitely looking to add more on price action next week. So that's gonna be it for this video. Just a quick update, and we have a more weekend coming up, so there's no Monday trading session. And I hope you guys all have a great weekend and enjoy the holiday, and I'll see you in the next video.